Amazon raises spending forecast to $125 billion. Revenue was $180 billion, up 13%. Operating income $17.4 flat year-over-year. AWS $33 billion, up 20%. Faces intensifying pressure from rivals Google and Microsoft. Free cash flow decreased to $14.8 billion, driven by YoY increase of $50.9 billion in purchase of property and equipment. Net of proceeds from sales and incentives. CEO said we continue to see strong demand in AI and core infrastructure, and we have been focused on acceleration capacity, adding more than 3.8 gigawatts in the past 12 months. AI has become a major area of investment across Amazon, including in its retail, cloud, devices, and ads businesses. The company is responding to an explosion of interest around generative AI, particularly after the launch of OpenAI's chatbot in 2022. Amazon has in recent years shaved its headcount after going on a hiring spree during the pandemic, which caused its corporate and frontline workforces to balloon. Moving on to cash flow statement, cash from operating activities was $130 billion. Investing mostly on purchase of property and equipment of $120 billion. From the balance sheet point of view, total equity was $369, up 29%, as property and equipment was up 28% to $324 billion. The company's overall share count has been increasing due to stock-based compensation that exceeds buybacks. Since 2022, Amazon has not purchased shares, aligning with its strategy of reinvesting cash into business expansion instead of returning capital to shareholders, even during the pandemic.
Microsoft revenue was $70.67 billion, up 18%. The Intelligent Cloud Unit, which includes Azure, reported $30.9 billion in revenue, up 28% from a year ago. Operating income was $32 billion,
up 18%. CEO said that the CapEx growth rate for fiscal 2026 will be above the rate in 2025. She had previously said there would be a slowdown in growth. In terms of balance sheet, total equity was $321 billion, up 19%, driven by increasing total assets and paying down debt. From a cash flow statement, we can see cash from operating activities was $37 billion. Using cash mostly in returning to shareholders and additions to property and equipment. Given the stock price was up 21% until now, I doubt that it is a good time to buy the stock. Alphabet revenue as $102 billion, up 16%. Cloud revenue $15.15 billion, up 35%. Operating income increased 9%, was $31 billion. With the growth across our business and demand from cloud customers, we now expect 2025 capital expenditures be in a range of $91 billion to $93 billion. In terms of balance sheet, total equity was $386 billion, up 18%. Driven by increases in property and equipment and non-marketable securities. Moving on to the cash flow statement, cash from operating was $48 billion. Mostly used in purchase of property and equipment, repurchase of stock, but given the price was up 50% year-over-year, I suspect that was a wise choice. Meta revenue was $51.24 billion, up 26%. Operating income was $20.5, up 18%. CEO said Meta consistently requires more computing power for its artificial intelligence initiatives, resulting in more spending on related data center and cloud services. The company also raised its 2025 guidance for capital expenditures, which will now come in the range of 70 billion to 72 billion. Moving on to the balance sheet, cash and cash equivalent was down to 10 billion, from 43.8 billion. Non-marketable securities and property and equipment were up rapidly. Total equity was 198 billion from 182 billion. Align with cash flow statement. Most cash spent on purchase of property and equipment.